is the president appearing to announce a few minutes ago that he will be imposing a new 50% tariff on all imports of copper. Take a listen.
Good evening and welcome to our in-depth coverage of a seismic jolt rocking global markets and industries worldwide. Just moments ago, news broke that President Donald Trump is grappling with the fallout of his bombshell decision to slap a 50% tariff on all copper imports into the United States, set to take effect on August 1st, 2025. This unprecedented move has triggered a staggering 10% surge in copper prices in a single day, the largest one-day spike since 1989, sending shockwaves through supply chains, consumer markets, and international trade. From household goods to national security, the ripple effects are profound. And the world is watching as businesses, investors, and governments scramble to respond. Let's dive into this explosive story and unpack what it means for the U.S. and the global economy. On July 8, 2025, President Trump stunned the world during a White House cabinet meeting, announcing a 50% tariff on copper imports. He formalized the decision the next day on Truth Social, citing a, quote, robust national security assessment under Section 232 of the Trade Expansion Act. Trump argued that copper, a critical metal for semiconductors, electric vehicles, military hardware, and everyday consumer goods, is too vital to rely on foreign suppliers. Copper is the second most used material by the Department of Defense, he declared, pointing to its role in aircraft, ships, missile defense systems, and hypersonic weapons. Blaming past administrations for gutting the U.S. copper industry, Trump claimed the tariff would reverse the Biden administration's reckless policies and restore a dominant domestic copper sector.
For this purpose, we are establishing the External Revenue Service to collect all tariffs, duties, and revenues. It will be massive amounts of money pouring into our treasury, coming from foreign sources. The American dream will soon be back and thriving like never before to restore competence and effectiveness to our federal government.
This isn't just a trait policy, it's a bold gamble to reshape America's industrial future. The market reaction was swift and chaotic. Copper futures in New York skyrocketed 13.1% on July 8th, hitting a record $5.69 per pound, with global prices climbing to $12,330 per metric ton, a 10% jump in a single day, according to The Telegraph. This marks the largest intraday gain since 1988. By July 9th, U.S. copper contracts traded at a 26% premium over London Metal Exchange prices, up from 13% before the announcement. The surge reflects a frantic rush by U.S. companies to stockpile copper from major suppliers like Chile, Canada, and Peru before the tariff takes effect. Goldman Sachs analysts predict U.S. copper imports could surge 50% to 100% in the coming weeks, tightening global supplies and pushing prices even higher. The frenzy is palpable, and markets are bracing for more volatility. Why does this matter? Copper is the backbone of modern industry. The U.S. imports about half its copper needs, 881,000 tons in the first half of 2025 alone, per Macquarie analysts. It's essential for electrical wiring, semiconductors, lithium-ion batteries, construction, and defense equipment. A 50% tariff, as Ole Hansen of Saxo Bank put it, is a massive tax on consumers of copper. Higher prices will cascade through supply chains, inflating costs for everything from appliances and smartphones to electric vehicles and home wiring. The auto industry, already hit by Trump's 25% tariffs on imported cars and parts, faces new challenges. Reuters warns that the copper tariff will make U.S. manufacturing and infrastructure materially more expensive, with construction and electronic sectors especially vulnerable. The timing couldn't be worse.
And so we're going to be announcing pharmaceuticals, chips, and various couple of other things, big ones. We did steel, as you know, they're 50%. We did aluminum, 50%. Lumber just came out.
Why don't you announce copper?
And we did cars.
Global copper demand is soaring, fueled by electric vehicles, renewable energy, and AI data centers. British research firm BMI projects a 70% increase in global copper demand by 2050, reaching 50 million metric tons annually. China, the world's largest copper refiner, is driving consumption with a 5% GDP growth target and stimulus measures, further straining supply. The U.S., however, is structurally short on copper, with domestic production lagging. The Aerospace Industry Association estimates it could take a decade to scale up U.S. mining and smelting to meet demand, meaning the tariff meant to bolster domestic industry could backfire, leaving the U.S. reliant on costly imports for years. Businesses are already reeling. Mike Zim, vice president at Cristech, a company producing insulated copper wire for utilities and solar farms, told the New York Times he was shocked by the price surge. His team raised prices immediately to cover the cost of imported copper. "This jump is real, and we're treating it as real," he said. The auto industry is in crisis mode. Reuters reports that the tariff adds more metal misery to car makers like Ford and Tesla, already grappling with 50% tariffs on steel and aluminum. The National Association of Manufacturers warns that the copper tariff could undermine Trump's manufacturing revival by making U.S. products less competitive globally. Small businesses, like those producing wiring for solar projects, face squeezed margins as costs soar.
Consumers are next in line. The tariff will drive up prices for everyday goods, refrigerators, smartphones, cars, and more. CBS News estimates that appliances, electronics, and home repairs could see significant cost increases. A typical electric vehicle battery requires about 80 pounds of copper, and higher prices could add hundreds of dollars to EV costs, slowing adoption at a time when clean energy is a priority. Construction costs, already pressured by high interest rates, will climb further, with copper wiring a key component in homes and infrastructure. The National Association of Home Builders warns that the tariff could push 30-year mortgage rates hovering near 7%, even higher, locking more Americans out of home ownership. The Federal Reserve's July 9 minutes noted that tariff-induced price shocks could derail planned rate cuts, keeping borrowing costs elevated. The global impact is just as staggering. The U.S. relies on Chile, Canada, and Peru for most of its copper, with China dominating global refining. Chile, the world's top copper producer, saw its currency strengthen as traders anticipated higher demand. But China's foreign ministry fired back, with spokesperson Mao Ning slamming the U.S. for generalizing national security. She warned, "There are no winners in a trade war," hinting at possible retaliation. Posts on X, like one from @AlertaNews24, noted a 2.4% drop in London copper futures as markets grappled with the tariff's fallout. Uncertainty looms over whether allies like Canada will face exemptions or bear the full brunt of the tariff. Trump's silence on this point has markets on edge. This tariff is part of a broader trade war. On July 8th, Trump hinted at 200% tariffs on pharmaceuticals, offering companies 18 months to relocate production to the U.S. He's also imposed 25% tariffs on South Korea and Japan for autos, and doubled steel and aluminum tariffs to 50%. These moves, layered on the copper tariff, are paralyzing business planning. CNBC notes that Trump's sector-specific tariffs, enabled by Section 232's national security provisions, are legally stronger than his country-specific tariffs, like the 50% levy on Brazil over the Bolsonaro trial, but they're no less disruptive. The White House is considering exemptions for some auto tariffs after industry pushback, but no such relief has been signaled for copper, leaving manufacturers in limbo. Politically, the tariff is a high-stakes bet. Trump casts it as a bold step to secure supply chains and rebuild the U.S. industry, especially for defense. But critics call it a misstep. Ed Mills of Raymond James told CNN that while the tariff aligns with Trump's national security focus, the U.S. is structurally short on copper for years to come. Nick Snowden of Mercuria called it an underappreciated shock to global markets, predicting tighter supplies and higher prices. The Financial Times warns that once stockpiles dry out, reduced U.S. imports could drag global prices lower long-term, but short-term spikes will hurt American consumers and businesses most. The tariff's legal basis is also shaky. Trump's use of Section 232 to justify national security tariffs is under fire for stretching the law's intent. A lawsuit in the U.S. Court of Appeals for the Federal Circuit challenging his earlier reciprocal tariffs could limit his authority if extended to the copper tariff. The international response is critical. Chile and Peru may seek new markets if U.S. demand drops post-tariff, reshaping global supply chains. China's potential retaliation could escalate the trade war, impacting not just copper, but commodities like soybeans or rare earths. Canada, a key U.S. ally, faces uncertainty over whether it will be exempt, with posts on X like @T13 highlights fears of strained U.S.-Canada trade ties. The tariff also risks alienating BRICS nations, already tense after Trump's 50% tariff on Brazil. If countries like India or South Africa follow China's lead in pushing back, the U.S. could face a broader trade revolt, weakening its global economic clout. What's next? With the August 1st deadline approaching, businesses are racing to import copper, but stockpiles will eventually dry out. The U.S. could face supply shortages, higher prices, and strained trade relations. Trump's vision of a dominant copper industry is ambitious, but Reuters experts argue it's unrealistic without a decade of investment in mining and smelting. The Federal Reserve is bracing for inflation, with tariff-driven price hikes threatening economic stability. Consumers face higher costs, businesses face uncertainty, and allies face a choice: comply with U.S. demands or seek new markets. The tariffs fallout could redefine global trade for years. This crisis raises profound questions. Can Trump's tariffs deliver the industrial revival he promises, or will they raise costs and isolate allies? Will American consumers bear the brunt while industries wait a decade for domestic production to scale up? And what happens if global markets pivot away from the U.S., seeking stability elsewhere? As the deadline looms, the world is watching to see how far Trump will push this trade war and who pays the price. Stay tuned as we track this unfolding drama and its impact on markets, industries, and the global stage.